The Institute for Financial Literacy is a collaboration between MoneySense, the National Financial Education Program, and Singapore Polytechnic International. The Institute is the outreach arm of MoneySense. We conduct free and unbiased financial education programs for the public. MoneySense is Singapore's national financial education program, set up in 2003, and is currently overseen by MAS, Monetary Authority of Singapore, and MOM, Ministry of Manpower. MoneySense aims to help Singaporeans manage their money well and make sound financial decisions on their own. Understanding loans and credit. This is the second video in a series of 4. In it, we will look into the workings of credit cards, zero interest and in-house installment plans, as well as buy now, pay later schemes. Understanding credit card interest. If you pay your outstanding credit card bill in full before the due date, no interest will be charged on the outstanding balance. However, if you don't pay in full, interest will be charged on a daily basis on the outstanding balance. Furthermore, any interest not paid by the next payment date will incur additional interest. On top of these charges, interest will also be charged on new purchases until full payment is made. Understanding how credit card interest rolls. Here's an example of how it works. If you have a credit card bill of $5,000, and if interest is charged at 25% per annum, how long will it take for this amount to double if you decide not to pay it? Your credit card bill will double in about 3 years, and you will be paying more than $5,000 in interest charges if you do not pay the bank anything. Here's another example. If you owe $5,000 on your credit card, which charges you 25% interest per year, and you decide to pay only the minimum payment of 3% each month, how long will it take for you to settle the bill? The answer is 14.5 years, and the total amount you will end up paying is $13,443, which is almost 3 times the original amount and includes more than $8,400 in interest. Here are some real-life examples of people who have signed up for too many credit cards. Because they did not keep track of their spending, they ended up with debts that spiraled out of control. Also avoid signing up for multiple credit cards, as this will increase the likelihood of overspending, as well as losing control of the amounts you owe the banks at any point in time. Using one card to pay the debt for another is a sure sign that you are headed for financial trouble. Always keep track of your spending and live within your means. There are alternatives to credit cards, like using cash to pay for your purchases, or using debit cards. Debit cards enable you to shop without having to carry cash. They have the advantage that the transaction amount is deducted or debited directly from your bank account, which helps prevent overspending. If you do rely on credit cards, use them wisely by limiting the number of credit cards you have, using cards only when you can pay in full before the due date, tracking your spending, adjusting the card billing cycle to tie in with your payday, treating charges made to your card as if you were using cash, avoiding impulse buying to get free gifts or perks, negotiating with the card issuer for fee waivers, avoiding linking in-app or game store purchases to your credit card. Zero-interest installment payment plans are offered by credit card issuers who have partnered with merchants to offer financing or loans to their customers. The loans can be repaid over several months. No interest is charged if payment of each installment is made when it is due, so the total amount paid ends up being the same as paying the whole sum upfront. If an installment payment is not made when due, then interest will be incurred. Also, all remaining unpaid installments are considered as your unsecured debt. Here are some considerations when using zero-interest installment plans. Several small monthly installments can add up to a hefty sum, and you might lose track of your total spending. Installments have to be paid on time, or interest will be charged. You may not be able to cancel the card until full repayments are completed. An admin fee may be charged if you decide to opt out of the plan or make full payment before the end of the plan. You have a contractual obligation to continue paying the monthly installments, even if the merchant ceases business and is unable to continue providing the goods or services you have purchased. In-house installment plans are typically offered directly by the merchants themselves and can even be for small amounts. These plans usually come with a flat interest rate that can range from 11 to 27% per annum. Repayment can be up to 72 months. Buy now, pay later or BNPL schemes allow consumers to pay for their purchases over short installment periods and even for small amounts. You should note that users are subject to credit limits per BNPL provider. Accounts will be suspended by the BNPL provider once a payment is overdue. Late payment fees will be charged, though these are capped and no compounding interest is levied on the outstanding amount. It is important that clear disclosures are made when the account is opened so that consumers are fully aware of the consequences of not paying on time. Although BNPL schemes appear attractive, they may cause you to overspend, as they could give you a false sense of affordability. Also, remember that there are penalties for late payments and that outstanding installments are considered unsecured debt, which could be a problem if you have already borrowed too much. Here are the key takeaways. Limit your use of credit cards, but if you have to use them, make sure you can settle all bills in full and on time. Zero interest and in-house installment plans may appear attractive, but they are unsecured debt, which you should take into account when reviewing your debt capacity as well as that of your family. BNPL schemes may cause you to overspend and lead to excessive debts should you sign up with too many schemes. Before signing up for any BNPL scheme, always make sure you fully understand their features, terms and conditions, especially late payment fees.